Hey everybody, Preston Brent here with our weekly roundup for the trading week ending October 27th, 2017, and what an end of week we had. We've had some strong earnings across the board from Amazon to Google to Microsoft, and naturally the Nasdaq just was on fire. I mean, the Nasdaq as we look at it right now is up 130.5 points. We've had market breaking all-time highs across most indexes or close to them in the Dow and the Russell. And when you have strong corporate earnings, strong GDP print that hit the wire this morning at 3%. That's back-to-back 3%. And then you get Amazon going ballistic, and of course that puts Jeff Bezos at the top of the food chain as far as the world's wealthiest man. He took out Gates today. But then you've had strong showings across the board in a number of technology issues, low inflation, low volatility, global synchronized growth, and there's no place for the markets to go but up, and low interest rates. So there's really not competition for money now. It's just flowing. Let me rephrase that. It is pouring into the equity market. Now, at some point, this is going to end, but as I've been saying all year long to our members, we are a buy the dip mode. At some point, that's going to end, and we'll catch it. Not at the peak, but we will catch it. And when we do, it's going to be an interesting time. But right now, especially the seasonality as we go into the end of the year with consumer spending higher and the Retail Federation projected to say that they're going to be more spending this year for Christmas gifts, holiday end gifts, I think it just portends the markets moving higher as we go through the end of the year, probably seeing the E-minis moving at least up to 2,600, maybe 2,650. Now, if we get the tax cuts through, we get infrastructure spending and these repatriation of money from corporations, corporate tax cuts as well, we can see the E-minis moving up to 2,700, 2,750. And then we're going to start to get into some trouble. Okay, but for now, very strong markets. What you see on the screen here is the S&P 500 E-mini futures. And you can see this 45-degree vector pointing to the upside. We're in the middle of the channel. There is no bearish divergence at all, which suggests that any move lower is going to be a buy the dip. That's where we're going to be. So you can see right now we're near the 2580.75 all-time highs. Very strong numbers. And look at Nasdaq, guys. I mean, Nasdaq, when it comes up on the screen here, look at this one. 62.2475 Nasdaq 100 futures. No bearish divergence in this at all. Again, looking to continue to run higher. And then, of course, if we look at the Dow, not all-time highs today, but just a few days ago it made all-time highs. I was able to get our members in on a really nice one-day day trade where we shorted the Dow futures a couple of days ago and had a really great run to the downside. Made some great money on that nice pullback. But again, we were in a buy the dip, so we got out of the trade, took our profits on that down move, and now we're continuing to take profits on other assets as we move back higher again. Same thing with the Russell. The Russell, we took profits on this short down move here with kind of a risk reversal trade. You can see it pulling back, and now it's kind of making its way back again. So I think we're going to see some highs across the board next week as well. So the indexes all look very good. Now, if we look at China, China also, Ashers, the tracking stock, through the roof. I mean, we're making new highs again today too with Asher. So it tracks the Chinese market, and you can see here highs. Now, if we look at the global market, Vanguard's all-world index, again, we're still in this, not quite a 45 degree, about a 40-degree vector to the upside. And we had a update today. Again, we're just moving higher, guys. It's just, that's the way this thing looks. That's the way we're globally synchronized to move higher. That's the way I'm looking at this right now. And then, of course, if we look at the VIX, it closed the week at 980. You can see here the VIX was sitting at about 1316 the other day when we had that big downdraft, and now it's sitting at 976, 98, roughly in that area. So volatility is coming back in again, and it really, this grind higher really is pushing the markets, or at least pushing the volatility lower. Now, the other thing is look at bonds. Very interesting. Bonds actually moved up today. Bonds has had a rough go of it over the past week, and it sold off a pretty good bit with the idea that, okay, we're probably going to get a rate hike in December. Now, today, if there was any doubt, today kind of cemented with the GDP number and with this big move and solid continued earnings in U.S. companies, the bond market, we're going to get a higher interest rate in December. But I think what also helped the bonds was the announcement of Powell as a potential replacement for Yellen. I think the rumor is now Powell with Taylor being the vice chair. So you got a dove in the chair and a vice chair is going to be hawkish, kind of like what we got now, as I said. So that kind of moves the bonds up, because then the big issue is what's going to be the interest rate factor next year. If inflation ever shows any signs of life, you're going to see bonds roll over. But again, an up move today, just a natural inclination of being down just a pretty good bit over the past week or so. But I suspect bonds is going to stay in this choppy range for a bit until we get some more data coming out. But I think bonds, longer term yield is going to stay lower than people think. I think the short term yield is what's going to move higher, which is going to cause the yield curve to flatten until we see signs of inflation. That'll change it. But for now, that's kind of the way we're sitting. Okay. Now, look at currencies. Look at the dollar. The dollar was up about 24 cents. The dollar index was up. We had a breakout in the dollar. Folks, this is a key breakout. You can see here, 94.04. I said if we take this out, which we did the other day, and then we follow through, that, folks, is a breakout. That suggests the dollar's going to move higher as we go through the end of this year. And by the same token, the euro right here had a pretty good little pullback, and we're breaking this key area. I thought the first stop off point where we would consolidate is this shaded zone, give or take a penny or two, around $1.16. And that's kind of where we're sitting here. But Super Mario Draghi came out the other day for the ECB. Of course, they didn't hike the rates, but he was also very dovish in his statement. He said, we're going to continue, even though the economy is growing, we're going to continue to be as dovish as far as the eye can see. They're cutting back some of their bond purchases, but they're still adding to their balance sheet. So that tends to push the euro back down. I've been telling our members now for about 5 months that just watch Yellen and Draghi. They're going to talk the euro down and the dollar up. Just watch them. And they started doing that. And with the dollar, I was telling our members here that this was an area where we want to look at possibly testing the waters with some longs down in this area here. And then once we cleared the 50 EMA, and you could see the retest, it held perfectly. And then we hit this downsloping channel for a bit. We broke through, we retested, and boom. This is a bullish sign, folks. So that's kind of what we're looking at the dollar. Now, the British pound is having a little bit of a harder time of it just because of the Brexit. But I still believe, and it's more choppy, but I still believe the pound over a longer period of time is going to move higher. All right. But you've just got to we've got strategies in place that kind of allow us to play this a little bit as we move higher. But the width of this channel just defines the chop, and it's fairly choppy. Right now, we're just slightly below the center line of the channel. We're sandwiched between the 50 and the 200 EMA. So let's see how this thing shakes itself out. But that's kind of where we're sitting on that, on that as a currency. Now, the other interesting thing was Shinzo Abe having won his snap election. That gives him more power, and what he wants to do is more stimulus. Here's the yen. It's been moving down, and now we're coming to a key inflection point with the yen. If we look at this area, right in this area here like that, the yen may hold up here a bit. If it breaks, we're coming down lower. Now, wherever the yen goes, the Nikkei goes in the opposite direction. If I were to just show you what the Nikkei is doing, you can see here that the Nikkei, because the yen is rolling down, the Nikkei is to the roof, right? Look, all-time high, 2017 highs, not all-time, but 2017 highs right here. Think of the yen as a place of safety. When there's global stress, money comes into the yen. When that happens, you're going to see the Nikkei fall. So these are just some really interesting trades that we're following and taking in our user group. Now, if we come down here and look at gold, gold is doing pretty much what we had said it would do, what I said it would do. The first test was the 1300 area. We broke it. Now it's finding support, quite frankly, at the 200 EMA. You can see the 200 EMA sitting right here. It's finding nice support, trying to climb up. But I can tell you guys, if the dollar gets stronger, which it looks like the charts indicate it will, and interest rates start to come in a little bit, then you're going to, or go up a little bit, you're going to see the gold roll right back over again. Okay, and if gold takes out the 200 EMA, it's going to move very quick down to the 1250, 1252 area, because both gold and silver, precious metals, although silver has a little bit of an industrial component to it, both of these tend to trade technical patterns very well. So that's what I'm looking at with gold. I would say any kind of near move here, I wouldn't really get all excited about it. I think the odds favor it to roll back over. Oil is where the excitement is. Up $1.38 today. I mean, this was the biggest move we've had in oil since the up move that we had on October the 10th, right? About 17 days ago. And we don't get these moves where oil moves more than a couple of percent, 2.5% a day. We're now just slightly under the 2017 open price. We're setting up for a little bit of a bearish divergence if we get a little bit of a pullback, but I've been telling our members since we've been in this trade that we've taken that we want to lean bullish. That's what we're doing with oil right now. And now we're on trade number. We've been taking profits out every month since November of last year. I think we're like 20 for 20 in our oil trades, and we're going to continue on. We're going to go into detail in some of our strategies, like these oil trades, some of these risk reversals, and some of these other really what you may consider exotic strategy setups, as well as some simple ones as well in our option masters. For those of you out there that watch our weekly roundup, definitely you want to be part of the option masters, because we're going to be covering everything from Reg T to portfolio margin and how you hedge your portfolio, especially if you're in portfolio margin. You got to learn how to hedge it. But these are just great trades. You can see we hit the bottom in oil this year in June, and we've been moving up steadily since. And you can see here that when we took out this downsloping channel, right in this area here, we attempted to take it out, it failed, and then we did another attempt, it failed. We finally took it out, and then we passed a key pivot here, and we're on our way. Okay, so the next key pivot for us, really, it's not the psychological barrier of 54.20, which is where we opened for the year. It's actually going to be right up in this area here, right around $55 a barrel. That's the nice psychological barrier. And actually, we could probably just call it this whole zone here from 54.20 to 55.24. We take that out, we're making new highs in 2017. Wouldn't surprise me. Remember, even though we've got the strong dollar, this synchronized global growth and a stronger GDP number tends to indicate that there's going to be a more demand for oil, and the supply is starting to rebalance, which means the odds favor oil moving up. Now, the end of the month of November, we get a very big OPEC meeting out of Vienna, and I suspect they're going to do everything they can to jack these prices up even more for a number of different reasons. But that's kind of where we're sitting in the energy market. Now we've got agriculture, meats, and softs that we haven't done any trades in the past many months, but we're going to be jumping into some of these because they're pretty good for our members. For our members this Sunday night, I will see you in our weekly market watch. If you're a non-member, I highly encourage you to come in and join up. We're having a great year this year. I think next year is going to be even more interesting because there's going to be a number of surprises in it. Just like this year, we've had a number of surprises in interest rates and inflation. Our option masters, for all of you out there that have signed up for it, we're probably going to kick it off, if not this Thursday, then for sure no later than the next Thursday evening. But I would highly encourage you to come in and sign up for it because it's just going to be so much stuff. Over 40 hours of content live every Thursday evening from 8 p.m. To about 9:30 p.m. each Thursday night, Eastern Standard Time, and the sessions will be recorded. So if you miss a session, you can pick it up, and then you'll be able to access the video recordings on pretty much any device anytime you want. All right, everybody, that's kind of where we're sitting for this really wild and crazy week. Members, I will see you this Sunday night. Otherwise, everybody else, enjoy the weekend. See you guys later. Ciao now.